Hey, how's it going, guys? And welcome back to the North Investor, where we're all about personal finance on our path to financial freedom. In today's video, for the next episode of 1 year to beat the stock market, I'll share with you my stock portfolio update for the month of July 2023. But before to take a look at my portfolio performance over the last 10 months, let's take a look at what were my initial objectives when I first started this challenge. First, obviously, I am aiming for as much growth as possible. Since I currently have a lot of defensive stocks, I am obviously purchasing a lot of great growth stocks at the moment. Nevertheless, at the moment, I'm trying to keep a lot of liquidity on the side just eventually to buy real estate, meaning obviously that I don't have that much money right now to invest in the stock market. Another initial objective that I had was to add some better diversification in my overall portfolio, notably in the real estate, the materials, and the consummation sectors, where I currently only have one stock in each of these categories. After, I try to keep a maximum allocation of 10% in any stock that I currently own, but you'll see that in my stock portfolio ponderation, there are a few stocks that have more than 10% of ponderation, notably a bunch of great technology companies that I have personally a lot of hopes for the future. And obviously, the big objective of this challenge is to be able to beat the stock market performance over the length of 1 year. However, keep in mind that I don't include all the dividend income that I've made throughout my different stocks, notably the value stocks that I have, meaning that the performance that you'll see in my portfolio won't be representing perfectly my total return over the last 10 months. And now, without further ado, let's take a look at my stock portfolio performance over that same period. As you can see right now, I currently have about $30,000 in cash, which can be used obviously for future real estate projects, but I'll also be able to reinject a certain part of that liquidity in the stock market. Now, if we take a look at the different companies that I have in my portfolio, sector by sector, I'll be starting as always with the technology sector, which is my largest sector in my portfolio. And you can see that I've had a few great performers such as Apple. Meta has gained close to 70% over that period. But I have had also a few stocks that have been massively underperforming the market performance. For example, both NIO and Rumble that have been down of about 30 and 50%. Unfortunately, after the recent drop of the oil price and of the energy sector as a whole, well, you can see that my three energy companies, which are Enbridge, Pembina, and Algonquin, has all been massively down. On its part, except for RBC and Manulife, you can see that all the great financial companies that I have in my portfolio haven't been able to perform quite well as my two telecommunication companies, which are Bell and TELUS, that have been down of about 5 and 11%. However, my consummation company, Couche-Tard, has been doing fantastic over that same period with some gain of about 15%, as well as my materials company, Savaria, that has been up of about 23%. And my super small stake in 5 and Plus has been doing fantastic with some return of over 100% of gain. And now has been the time to see what has been my stock portfolio performance in total over the last couple of months, and it has been about 5.76% of total gain, or some gains of about $5,300. So right now, only for my stock portfolio, you can see that it's worth close to $100,000. But now, let's see what is the comparison between my stock portfolio with the overall market performance over the same period. As always, to track the market performance, I'll be using the famous S&P 500 index, which is an index that will group the 500 largest American companies by market capitalization. And when we take a look at what was the market valuation as the 1st of September 2022, it was worth about 3,966 points, meaning that it has gained about 12% of total return over the last 10 months. So as you can see, since I haven't included the total dividend that I have made throughout that period, I am currently underperforming the market with my stock portfolio. But to be able to understand why I have been underperforming it, let's take a look at my total sectoral distribution in my portfolio. Since I am currently aiming for as much growth as possible, as I told you earlier, I have obviously invested massively in the technology sector, which is the largest sector in my portfolio with close to 36% of it. And since I love to invest in great Canadian dividend stocks in my TFSA, I love also to invest in great financial companies that have been underperforming the market over the last couple of months, but it is also why I have close to 30% of my total assets in my portfolio in that sector. After, you can find other great sectors in my largest positions, such as the real estate, the energy sector, the communication sector, and the consumption sectors, as well as my great Savaria company in the materials fields, which is worth close to 4% of my total assets. And so in terms of the stocks that I've bought throughout the last month, you can see that I've made two big purchases. First, you can see that I've bought about 30 shares of TELUS for about $700, which I have bought before the ex-dividend date because I wanted to be able to reinvest those dividends to be able to buy more shares. And I've also bought about 4 shares of Meta for a total of about $1,100 because personally I think that Meta is currently one of the most undervalued tech companies at the moment, and I do believe that Meta might see a lot of potential growth over the next couple of years. But on your side, if you're looking for the best stocks that you can buy right now in June 2023, well, check out the video that's gonna be right over here, and I will see you soon. Peace!